Hello everyone, welcome back to episode 3.3, specifically about risk management, about how I use risk management in my trades. I'll show you examples, specific charts. I'll not go over the why and how I took a trade, the entry model and the exit model. I already did that in episode 3.2. Please watch that before watching this video, else you'll be a bit confused. Please, before we get into it, like, comment, and subscribe. We love the views and the support you guys gave us in the previous episodes, but we just need more likes. So please don't forget to do that. And as I said, specifically about risk management, I'll be showing you charts, I'll be showing you examples, I'll explain the risk management behind it, I'll show you the good, the bad, and the ugly. And as I said in the previous episode, that's where I did all the entry and exit models. So let's get into it. Risk management, episode 3.3. Master the discipline of protecting capital and maximizing gains through proper risk management. Episode 3.3 overview. I've labeled them into 5 subtopics. Even for my examples, I've labeled it into 5 folders. One is going to be about trailing stop loss, how I trail my stop loss to maximize EV and RR. The second one is going to be valid break-even trades that, in my opinion, were valid break-even trades. The third one is going to be valid losses, full transparency, showing you the losses that I've taken, and in my opinion, that they're valid losses. The fourth one, averaging down. I've done some ugly things, averaging down into a losing position, so I get a better entry, oversizing, hoping and having that copium of the trade working. Big no-no. Bad risk management, where bad risk management, having no plan on my risk management, having no plan when I take the trade, leading into missing gainers. And the first thing that we start with is trailing stop loss. As you guys could see, that on this trade, as I said, I'm not going to go over why I entered here or why I exited there. I already did that in episode 3.2. Please watch that. But you could see I'm trailing my stop loss. The philosophy behind it is I'm trailing my stop loss. Initially, I entered this trade. I was risking the lows of this candle. You could see risking the lows of this candle. And then as the trade pulled back, which I'm okay with, the first pullback we're okay with, and it goes, I'm trailing my stop loss here, trailing my stop loss to these lows, trailing my stop loss to these lows. And you could see I was hoping for a bigger push up. It rolls over, breaks the low, and I'm out. And remember the exit strategy, the high, low, low, high. That's where it falls under. And you could see that I maximized my gain for the time being. I could have re-hit it, but for the time being on this trade, I had a perfect risk management setup. And then you have trailing stop loss. I'm going to quickly go over them because I have a lot of examples about them. And I just want to show you guys all the charts to give you a good idea and good indication on what trailing stop losses are and how to do it efficiently and how to do it properly. You could see the second chart that I have is from IWM. I entered longs here. My stop loss was around this candles low, and I was trailing my stop loss every time it went up, and I was able to get the pop as it filled the breakout on the bigger pop-up, and then I exited everything, trailing my stop loss as it went. And I have a folder already ready that specifically goes over my trailing stop losses. And then I'm going to pull them up here. I think that's way better. Let's do it like this. And then you've got the first example. You could see I enter shorts here. The first pullback, I'm always okay with it. My stop loss was on these highs here. And then as it rolled over, I trailed my stop loss to these lows. And as it continued, trailing my stop loss here, takes some out. My stop loss is around these, rolls over again. I trail my stop loss to these lows, trail my stop loss to these lows. And every time it makes a newer higher low, a lower high, I'm trailing my stop loss up to a point where I know that I should be taking profit because it comes to a key level or I see bits stacking up or whatever. As I said, I already went over why I already exited this trade in episode 3.2, but you could see I'm trailing my stop loss efficiently to milk the most out of this trade. Then you got a higher time frame play. You could see I have a bit of a wider stop loss. I entered this trade and my original stop loss was here. And as the trade was working in my favor, I was decreasing my stop loss, decreasing my stop loss to break even. So now I'm in a trade where I'm in with 10 contracts and I'm risking $332. And as the trade works in my favor, I'm diminishing my EV. I'm diminishing my risk on this, increasing my EV and increasing my RR. Till the BO, you could see I enter longs, 1 minute bar breakout. You could see I enter longs, risk is on these lows. And as this trade is working up, I was on live stream. I was decreasing my stop loss, so I don't achieve, I achieve a higher RR. You got the other example, gorgeous example again. Enter this trade. I remember there was a VWAP play and then entering this trade. And as you could see, I'm trailing my stop loss. As it first went down, I trailed my stop loss to these highs, made a new high, trailed my stop loss to these highs, and then as it was rolling over, trailed my stop loss to these highs up until we got into those key levels, took my profits, and it was a nice trade. Could have held for a longer move, but you could see that I was efficiently trading my stop loss, so I milk out the most out of this trade. Then you got this example, which again, I added size here, added some more size, stop loss was on these highs, took some out, and then I let my stop loss originally from here, took some out, and I brought my stop loss to around break even, which was those levels here, and I held it all the way up until it came back to a key level where I wanted to take profit. Now you could see that I'm not really worried about getting chopped in this middle range because I have my stop loss set. I have a plan on where to trail my stop loss and how to trail my stop loss, and I have an entry and exit model. And as I said, I'll just quickly go over all these charts because I have a lot to discuss in all the other charts as well. But this is just going to be a quick video just to go over the risk management that I have in play in my own trades. You could see market goes down. I take my entry, stop loss is on the lows. And as the market is going up, I go break even, makes a new higher low. I put my stop on these lows as it made another push. So I was already securing this trade in a positive way. Let's put it that way. And it went, and this is where I was okay taking profit. And then you've got some better examples about, again, I don't go at break even. If it rolled over, I would have gone at break even, or if it rolled over on this push up, rolled over, I would have taken my L. But you could see I enter longs here. My stop loss was originally here, and as the trade went up, I put my stop loss here. So in case if it rolls over, I'm decreasing my stop loss. Instead of taking a $300 L here, I'd rather take a $150, $200 L here, which in the long run, if I consistently do that, diminishes my losses substantially in a year basis. So instead of taking a full 1 RL, I'm only taking 0.5 RL, which if I do this consistently every day for the next year, it accumulates for around 100 RL instead of a 200 RL, which is substantial if you consider like me, a R value of $300, which I'm probably going to save 15K on it. So you can see I'm trading my stop loss again. Gorgeous example. We already had that in the example at the front page. And then there was the VWAP execution. I was just showing the execution for the other example, VWAP. And then one thing which I like about trading stop loss is that good that I put them separately. You could see that I have two examples next to each other. They're both on the same day. I was long here. My stop loss was on these lows. And then I was trading my stop loss. And at the point, I trailed my stop loss to these lows. And because that was already a break-even value, I just put it at my break-even. And you could see we never got the higher push up. I went out break even. I wasn't stubborn with it, and then you could see we reclaim it. I enter longs again. I put my stop loss on these lows, and I'm trailing my stop loss all the way up, and I was able to catch everything from that trade. And you could see my execution on it here as well, which is very nice to look at. I think this separates me from other traders as well, that I'm able to show execution on my trades. I'm able to show you that I'm really using my own concepts, using my own trading philosophy and framework into my own trading. So yeah, that's about trading stop losses, and I think I use that the most for maximizing EV along with the entry and exit models I have. But this is one way to protect myself as the trade is working in my favor. Make sure that I pay myself, but also make sure that I'm not exiting too early, even though, as you will see in the next coming slides, I do also make mistakes where I do that, and we're going to get into them. Valid break-even trade. So which trades were for me valid? So you could see I have two charts here. I'll pop up more charts in a bit, but I have two charts here, which is the valid break-even. So I don't really like going break-even very fast. There are scenarios where I do that, and once again that comes back to the strategies that I explained in episode 3.1. When I'm in a trade, I usually don't like entering trade after the second pullback. So there was the first pullback, second pullback, so now I'm trading the third pullback. Usually I never take a trade here, and I explained in episode 3.1 why I don't do that. The third pullback, the EV is diminished, the probability of it reversing is very high, as you could see. So when I enter a trade, because I really like the setup that I still take it, I go instantly break even. So you could see I take my short, it goes down, I immediately go break even. Unfortunately, it would have worked for a bit and that reversed on me, but I already took my break even because I want to be fast on taking my break even. And that's for me proper risk management. That's for me a proper valid break even trade, because I'd rather be break even in a trade that I don't usually feel happy. That's a C plus setup for me, or C, I grade it as a C setup, and I go break even on it. Another example is this one. So you could see I take my short and it works. And as you could see, I could have put my stop loss on these highs, but I was okay with having it break even. I already took these shorts that day. I remember it vividly. And I also took that short, which I showed in the other example. But you could see that I shorted it. Stop loss was on these highs. And as the trade is working in my favor, I have no reason to risk these highs, because if it already comes back to my break even, I already know that's also going to come back to my stop loss. So stop loss was at these highs here. And I don't remember exactly where it was. I think it was these highs here. It was these highs here. And as the trade was working down, I put it on this high. And as it was going down, I put my stop loss at break even. And that's a valid break even trade. I'm already up 30, 40, 50 points. And if this comes back to my break even level, I'm 100% okay with being out on it. Let me open up my folder once again. You could see stop loss at break even, valid setups. We already went over this, so I'm not going to talk about this anymore. And then you've got this one, which is again a valid break-even trade. I take my long. It's a FBD, as I said. I'm not gonna go into why I took this trade. I already did that in episode 3.2. But I take this trade. I take my entry. My stop loss is on these lows, and as the trade is working in my favor, I'm trailing my stop loss and I'm taking my trade out. And as this already did a push, just like the other example that we had here, that I showed you guys here, I will be taking my trade out at break even, because I have no reason to hold it, even though it did give a push up and then we filled on the later in the day. I want to be out break even. If I get a substantial move, I have no reason to let a good trade turn into an L. This example, let's see what this was. Short, and this is on the same day. I remember for the other one that I showed you, it rolled over. I take my short. Should have taken shorts here, but that's for another topic. I take my short here. I'm risking these highs, and as the trade is working in my favor, I went break even. I took some partials, and you can see I went at break even. So one thing which you will realize from me, the way I manage my risk, is that once the trade is heavily in my favor, I have no reason to have that copium, which I sometimes also still do, which fall under my bad risk management practices. But I still have some certain cases where, you know, the trade works in my favor. I'm trading my stop loss vividly, and at some point, if it comes back to my break even, I'm out. I don't want to have anything to do with that trade, because if this trade doesn't want to continue and the bidders are stepping up, in case with this short, then I have no reason to be in it anymore, especially after I paid myself. I'm not going to let this trade, at least I want to get paid for my work, and I got paid for my work, and unfortunately I didn't get paid for the rest. Other example, already went over this as well from here. And then you've got the last example, which is again another setup. You think they're the same, but they're not. With this one, you can see I trade similar setups. You'll see that all my trades, they look very similar, because I recognize my pattern and I take my patterns consistently all day of the year. But you can see they're different. So we already went over this one. And then you have this, again, short 1 minute bar. And we break these levels, and as we're breaking these levels, I know that we should not be coming up here, because if we do come back up here, that's an FBD, and I don't want to be in a trade where it does an FBD. And remember what I said about my exit strategy in 3.2? One of my exit models is a FBD threat, and this is a textbook setup FBD threat, so I want out break even. So this is it about break even trades. Then we're going to go over valid losses. So trades that I took my L, and I'm very proud about the L. Let's put it that way. I'm happy about the way I took the L. I'm happy about the way I managed my trade, and those L's are the reason I'm able to stay in the game, because those valid L's that are so small are able to only chip away bits of my profit, whereas my bigger wins are able to. They're the reason that I'm able to make money. Let's put it that way. So Also, the key thing is that everybody knows how to have a winning trade, have a banger trade, but a lot of people suck with having consistent small L's, which luckily I'm able to do very well. You could see valid losses. So as I said, I like risking highs and trailing my stops along the highs and trailing my stops as the trade is working in my favor. So one thing which I believe that I did very well is that, okay, I'm short here, my stop loss is on these highs, and you could see as the trade rolled over, we went here, stop loss was here, we made this new high. I put my stop loss above this new high, and you can see we go back up. We never break this high. We roll over, and ideally what I wanted to see in this area is that we roll over all the way down. Unfortunately, it didn't happen. It came back to my original stop loss on these highs, and I had to take it out, which I'm okay with, and it was a valid L. And I remember I caught these shorts all the way down, which I'll show you in a bit, because I was able to have such a small loser and being able to catch such small winners. My risk management allowed me to end up the day green. The other trade, this one, again, I short hit here. I'm not going to explain why I shorted this, but, you know, filled breakout. You could see rollover. I shorted. The highs was my stop loss. I took the short here. These highs were my stop loss. I got a bit of slippage, but I took this here. This is where I called it a quit. And you could see very tight small L. And I'm very proud of this trade. Let's go over more examples. Valid Ls. I have plenty of them. Let's first take over valid Ls that end up rewarding. So I'll put them together. You can see this is one trade. And what I mean with this, I'm going to explain this in a second. That's the second trade. And then, oops, and then we have the third trade. And then I'm trying to put them all together. Let me show this out of the way. So what do you see here? You see here on that day on the NQ, I shorted here around open and I go out sort of break even. I got slippage. I remember I was too busy taking screenshot. This should have been a break even trade, but I took a small L on it, nothing major. I retry it here. You can see I take another short here. What happens? I take another L. Completely fine. Happens. And you can see I'm shorting here. I'm risking candles high because I'm trying to play the continuation. So I want to have a tight stop loss. And you could see I get taken out, which I'm completely okay with. And then you could see, yes, I took the shorts here and I took the shorts there. I'm able to trade this rollover. So this time I'm shorting here. My risk is above these highs. And you could see that we roll over and we just get that massive push. So you could see that this tiny L, and then how much I made here. So it kind of shows that when I have a valid L, that it really pays off when you have a W. So very happy about this. I was short here and then stop loss was here. And as it rolled over, trailed my stop loss. And as it went here, trailed my stop loss to break even. And I remember that once it made this candle low here, put my stop loss around there. And this is around where I wanted to take target. So I wasn't trailing it anymore. I just wanted to take my target. Very, very, very nice trade. I'm gonna I have another example like that. And this is that one. So you could see that another phenomenal example. I was long here. Fortunately, I'm not able to show. I don't know why TradeZilla gave me a bad screenshot, but you can see I went long here. 1 minute bar. I went long here, and my stop loss was on these lows. And you can see the moment we break these lows, I get out. Even though yes, we reverse and we work. I took my L and I didn't average down. I didn't get mad and just punch the long button. I took my L, risking these lows, and I was never able to really put my. If it pulled back and made a new low, I could have put my stop loss at break even or below the low. It just didn't never do that, which sucked for me because I really like that trade and I was up around 40 points on it. But I also don't want to go break even instantly, you know. And you can see I risked the lows and I'm happy taking that L. And then as we rolled over, I re-entered here. I had my stop loss on these lows, and as the trade worked, I was putting myself at break even. And as it broke this high, low, low, high, trailed my stop loss to here. And then unfortunately, yeah, it's a nice trade. I could have made more, but I was happy that I was able to make twice as much as I lost in the previous trade. So I ended the day green again because of my risk management. So I trailed some here, and as I was trading, I remember I trailed a bit too fast because I was hoping that this would just continue, and it took me out, which I'm okay with, but very nice trade in general. So this is just to show you that having a valid L, taking your valid Ls and not being stubborn will be rewarding in the long run when you're taking those valid Ws, because your valid Ws will be twice as much as your valid Ls. Have another example. Sorry. And you could see I took my shorts here, which is on this. They're traded on the same day. I took my shorts, I took my long here, and then once again, I go long on this candle here. My stop loss is the low of day. I'm completely fine. If I have a stop loss at the low of day, I eat that stop loss and I'm happy with it. And I took a tiny L, and then the market went down, pullback went down, and then you could see I longed again. And then as the trade was working, I went from stop loss low of day to break even to somewhere above this high, low, low, high. And then I was trailing, and then I got out, and the remaining I got out break even, as I explained in the other one in the break even section, that I will never let a trade that is massively up turn against me and end up in an L. So very happy about this as well. Very happy trade that, very happy that my risk management allows me to be green at the end of the day. But it kind of shows that it's very rewarding to be consistent with your Ls. I'm gonna pull up some other examples of my valid Ls, so you could see I take my L, I take my short, I go at the high of day. I don't fight it, I don't do anything, I just eat it and I'm okay with it. Everything that I'll show you are valid L's in my book, and I'm happy that I took them. Another example, you could see I short the rollover, it comes down, it goes back up, it pulled back down, and then this is where it should have continued, and unfortunately it doesn't. I eat my L above these. This looks like a break-even trade, which is technically a break-even trade, but I was risking these highs. So the moment I didn't get the rollover and it pushed back up, I took my L, and you could see gorgeous, gorgeous exit. Another one, you could see short, stop loss above the highs. I think already went over that here, but very nice risk management. Then you've got this trade. I buy here. It does AFBD through these levels. I buy here, and it goes, pulls back. I don't go out break even yet. And as it made this new leg, I put my stop loss around here, around break even. And as you can see, unfortunately, it pumped down so hard that it took me out for a slippage, which sucks, but this is still a nice L. I ate that L and I'm happy with it. Should have been a break-even trade, but still nothing major. Let's put it that way. Literally nothing major. Then you've got this trade, which I already went over as well. Let's see. Then you've got this trade. You could see I took the shorts here, ate the L here, which I went over a couple minutes ago. And then I retried the short here, was risking these highs here. And yeah, I did get a bit of slippage around 3.4 points, which is normal. But yeah, that was my thesis. If it gets there, I want to be out. And as you could see, it did roll over and it would have worked. I could have just added more size, but those are bad practices. And you could see in the later slides, I'm going to go over some of the trade that I did do that, where I ended paying up a heavy price for it. But as you can see, my stop loss was at the highs and I just took my stop loss, and I'm very happy about my risk management. Already went over that as well, I believe. So I might be double because I just skimmed through my journals and I took everything out that I already had in there as a L. Another trade, you could see midday around 10 a.m. I took this short and my stop loss was high of this day. And you could see I went out high of day. Even though it would have worked, I wouldn't have taken an L, but I'm very happy. I stuck to my risk management plan and it paid out. Another example here, take my short, risking on these highs and a bit of a wider stop loss, but I just stuck to the stop loss. I ate the L and went on to the next trade. Another long, you could see a long thinking that's going to roll over, and you could see I risked the low of day and I just eat the stop loss. And it kind of shows that I'm consistently taking my L's without any, I'm not fighting it. If the trade doesn't work and I have a set stop loss and I'm like, okay, if it goes there, it invalidates my idea, I just go out. You could see I really go out. I'm not really fighting it anymore. And those small L's that I take are the reason that I'm able to really hit it big and be able to end up green on the month, when because my other trades, they are massive, and they, you know, 1 W that I make just eats up already 3-4 L's that I've had. So those are valid losses, and you could see the way that I take my losses are consistent. The way that I take my losses are or usually on a high of a structure, and the way that I trail my stop loss is moving along structure. So this is valid losses, and then we're going to go about averaging down, and those are the uglies that I'm going to show you. Those are bad practices that I've done. You could see that I long here, I long more, and I take my L here, which it looks okay, but I shouldn't be doing that. I should just cut it when I'm not happy with it. And my original idea was stop loss below that level here, but I had no reason to be adding this extra size, which sucks. So that's a bad practice that I've done, and this was from very recent, yesterday. I remember it vividly. I took longs here that was holding VWAP, and then I added more, and then I was up a decent chunk. My average was around here. I was up a decent chunk, but you know, I was risking so much that I at least wanted high of day or a push to pre-market highs, and then I just had to take an L for it. My average was around here. As it broke this level, I was like, okay, you know, I'm just gonna get out. This is not gonna work. And as you can see, it didn't work, and I'm not proud of this trade. You should never do this. I'm just showing you that I also have my flaws. I have some more examples if I remember. Yeah, bad examples, averaging down. That's another example here where it went over that. And then you've got this one. You could see I'm shorting cover. Worked in this scenario. And as I said, I don't condone this. I should have never made money on this. I wish I took a fat L, so it scares me away. You should never do this. What you should be doing, you take your stop loss, you take your short, you get out here. That was my original idea, but I was like, no, but I know it's gonna roll over. And yes, I was right. I just didn't want to accept that I was in a short at the wrong time, and I should have just eaten that L and then shorted here and then make my money here. So this trade is valid, but this one is not. So I should have never shorted and then add more stats. I should have just shorted, gotten out. But yeah, it worked in my favor, but really shouldn't. Another example, you could see I've had my ugly days. I short here, it breaks the structure. I should have taken out everything here, and I didn't want to do it. I short more, and I get out. And you could see this was a very bad L. And this is what I don't condone. And I have maybe 10 examples like that in a whole year. But I also am a human. I also make mistakes, and I also have my days where I'm a bit tilty. Another example here, you could see buy, and you could see once again, you know, I'm have an average of around here. I'm up a decent amount, but in my mind, I'm like, okay, I'm risking so much money. I at least need to make twice of that, and I just had to go to a break even. But you could see that in those cases, every time I've done that, it never ends well. So kind of a good example on that. Doing this, averaging down, is not rewarding. Whereas you could see that when I'm trading normally and I'm trailing my stop losses good and I'm taking my L's good, that I actually have decent trade. So another example of this is, again, a very wide stop loss. No idea why I did that. I think I just had my flip moment. I short here, my stop loss was on the highs, and it was so choppy that I didn't want to take the L. And then I remember it went up. I should have taken the L. It rolled over. I was like, okay, maybe it's gonna work. And this is where I should have really cut it, but bad trade, very bad risk management. No reason to do that. And then the last one for the bad examples, already went over that in the other chart. You could see buy, no reason to do that. I'm just increasing my L for no reason, where I could have just taken my L long here, taken my L on these lows, and I could have longed this area, and I remember longing this and then make that profit. But now my L is so big that even if I caught this trade, it would have just been a break-even day for me instead of a green day. So it kind of shows that those bad habits really eat into your profit and potentially make your month or year red. And then we're going to go over last one, which is bad risk management. And with bad risk management, I mean where I don't have a plan, where the profits get into my head and I'm not really myself, where I'm not trailing my stop loss properly. And you could see that those trades were potentially huge trades, which could have made my whole week. But what do I do instead? I don't have a plan. I'm just trailing. I'm not even trailing my stop loss. I'm just randomly taking profit because I see green. And I have some days like that as well, which I regret a lot because they could have been huge days. But I have them as well, and I'm trying to show you that this is a bad thing to do. Those are bad practices. You could see in comparison to the trades that I have, the ones that were good, my good trailing mechanisms, they would be very rewarding. Whereas in a case like this, where I do trade the PNL instead of trailing it on these lows, I could have potentially even, I'm long here, I was risking the lows. It goes, I could have put break even. It never came back to my break even. So if I didn't touch it and I just let it at break even until structure was formed, I would have been okay. And then you could see it's consolidating, breaks out. I could have my stop loss at these lows and then trail my stop loss, and I would have probably made a 100-point trade. But then instead, what do? I take 20-point trade, and then it breaks out. I had so small size left that I was like, you know, whatever, I'll just get out of everything. And I had to pay the price for it. The same as here, break pre-market highs, and instead of really trailing my stop loss, I gave everything. I could have made more. Like, sucks. And I have plenty of those as well. And that's here. You could see. I don't know where to start yet. I have some good examples on where I did do it well and some bad examples. So those are the bad examples. Let's just randomly over into this. You could see massive trade. I short, and this thing just rolls over all the way, and I have no reason. Like, nothing tells me to go out. Like, I'm just taking my profit because I see green, and you could see that we're rolling over. All I had to do is put my stop loss above this high, and if I trailed it properly, I could have, you know, it goes down another leg, trail my stop loss here, it goes down, pulls back, goes down, trail my stop loss here, goes down, pulls back, trail my stop loss here, and then it goes down. I could have made a 200-point move, 200-point drop. I could have made 200 points on this. What do I do instead? I only make 50 points because I see green. So those back practices, I'm also trying to get it out of my mind. Another example, you could see my short is here, my stop loss was here, it pulls back, goes down, I put my stop loss on these highs, and then it pulls, and instead of continuing, I get mad that it doesn't continue, and I get mad that it's choppy, and I remember I just went out, top ticks me, and it rolls all the way down, and then you can guess what already happens. I get tilted, and I remember I short this again, which I probably have somewhere around here. It should be this one. No, should be this one. Yeah, you can see I short this here, I get out here, I get tilted because I'm like, yeah, why doesn't it continue? And I didn't stick to my plan, whereas if I kept my original stop loss, I would have made a banger of a trade. But instead, what do? I get mad, I go out, and you could see this happened here, and then I re-hit it here, which is around this level here. I re-hit it here, goes against me, comes back down, and then I have to go out break even. So in both cases, I have a perfect entry, but instead, because I'm not sticking to my stop loss rules, I'm not sticking to my risk management plan, I had to end this day in an L. As you can see, this is an L, and you can see this is a break even. I had to end the day in a small L, which should have been a massive day for me. And it kind of shows that bad risk management practices will really mess you up. And you could see that this, if I didn't lose myself, if I didn't go on tilt, if I didn't lose my temper, this would have also been a massive trade. I could have taken some out here, but instead I just held it all the way because I wanted that follow through. And you can see it takes me out, and then it rolls over, and you can already imagine I was so mad here that I just closed the day before I made more mistakes. So bad things. And then you've got this example. You could see, again, I'm shorting here. My stop loss is high of day. It goes, it never breaks high of day, comes back down. I trim my stop loss to this high of day. Again, never breaks it down. But because I get mad that on such a red candle, such heavy volume that we don't roll over immediately, I get mad. I top take myself out of this trade for a 10-point L, and this thing goes 50 points in favor. So you could see that when you're really ignoring your risk management practices, that it really haunts you. And as I said, I'm just trying to show you guys the way I manage my trades. So you guys in the next coming episode, 3.5, 3.6, 3.7, 3.8, you understand the way that when I talk about my risk management, you understand that this is the way that I manage my trade. You can see after the breakout, my stop loss was on these lows. I have no idea why I went out again. And I could go over millions of examples. You could see I long here, it goes down, my stop loss is on these lows, it goes back up. I throw my stop loss to this here. And I remember I already taken 5 trades on this day, where I just was like, you know what, I'm done with this day. I don't want to trade anymore. I'm mentally so exhausted that I didn't stick to my rule, and I just went out for break even. And you could see, we go all the way up. Whereas my stop loss was on these lows, I would have been in this trade. Sucks, man, sucks. Very annoying when I look back at this. And then you've got 3 December. What was this? Once again, I take this short. My stop loss is on these highs. I have no idea why I'm trading my stop loss to these highs here. No idea why. And you could see it would have never taken me out. I just go out and I miss a potential W trade. Those are the executions. I don't know why I have in there. Sometimes I just believe that, showing people that I genuinely take the trades as well. But if I show you this, there's literally no learning material in this. Like, you wouldn't know where I entered. It could be here, it could be here, it could be here. And you don't know where I exited. That's why I don't show you this. And then you've got this one. Once again, me on tilt mode. I remember that was my 4th trade or something like that. I take my short. I should have taken some here. It comes to a key level. Or I should have gone break even. But nah, I got so mad. I was like, no, this has to work. And I'm giving myself copium. I'm watching this candle close like that. I was like, okay, I have to go out. Usually if I'm on a clear mind, I would. And I have to eat an L again. And then you've got these examples. Once again, I long here. And as I think this is also on the cover, you could see that instead of trailing my stop loss and having a real exit or a real risk management plan, what do? I just take everything out, whereas this could have been a 6-7 hour trade. Annoying. But yeah, it kind of shows that. I'll show you this one as well. See, I make plenty of mistakes like that where, but yeah, this shows that if you don't have a good risk management plan in place and you don't follow it, you're just going to miss out on huge profits. So yes, I do take W's, but days like this, trades like that, they should be bigger trades if I just stick to my original rules. And then you've got the good examples, which I did do very well. You could see that I long here, my stop loss is here, I'm not out here. I don't get scared out. I have my stop loss here. If it goes there, so be it. I'm okay with it. I'm okay with losing 300, 400 bucks there. And you can see it works. And then I trail my stop loss to these lows here, as we're already here. And then I'm trailing my stop loss and I go out, and the rest I go out break even, which I'm completely fine with. As I said again, I'm not letting a trade that's heavily in my favor turn red. So I take 80% of my position out. If it wanted to go more, happy days. If it doesn't, then good risk management in place. If it goes to break even, I'm out. No hopium, no copium, no, oh, let me hold, see if it continues higher. No. So Another example of good practices you could see, I took my long here, and I don't know if you guys remember, this is where I went long, and then ate the L. So this was a big L, and you could see I this time went long, I trailed my stop loss, took my profit, and the rest I went out break even. This wasn't, the L was so big here that it didn't cover, this W didn't cover for it, because that adding more size, if I didn't do that, this would have literally put me green on the day. And it kind of shows that those bad practices will haunt you in the future. You do get the instant satisfaction averaging down, you get it, but in the long run, it's just going to eat you up. Well, this should have been a 20-minute video, already at 35 minutes. But yeah, this was supposed to be a quick video, just go over the way that I manage my risks to prepare you guys for the upcoming episodes. You could see again, I'm shorting here. My stop loss originally here, it goes up, never breaks it, rolls over, I trail my stop loss to here, goes down, goes over again, rolls over again, I trail my stop loss here, and then we get into these key levels, I take some profit, and you can see the remaining, I go out break even. This is literally, yes, I didn't make much, yes, this is just a normal, I take partials break even trade, but this is such a gorgeous trade that I take pride in this. Perfectly managed, and trades like this keep you in the game in the long run. Another example right around here, you could see I buy here, it doesn't FBD, stop loss is low of day, if it goes there, so be it. And you could see I'm not panicking like the other examples that I had here. I'm not panicking like these examples here. Remember, I'm really milking the most out of this trade, and this is what if I'm in a clear state of mind, trailing my stop loss and my risk management allows me to do that, where I'm trailing my stop loss, trailing my stop loss, trailing my stop loss, and I'm able to catch the top of the move from the bottom to the top. Gorgeous trade. Another example, you could see I short here and I don't get shaken out here. I have a set risk management in place. My stop loss is high of day, and as it went down, I was break even. So I was like, okay, if it comes back to my break even, so be it. And you could see we do a tiny pullback, we go down, I trail my stop loss to these highs, we break these lows, and we come back into these key levels. I take my profit, and I'm trailing my stop loss right around here. So we chop, and we go down, we do a field breakdown, and then I take the remaining out. And my stop loss on this. So either way, whatever would have happened, even if this just spiked back up, I had my stop loss here, and I would have still secured the same amount that I did. And I just gave it a chance, and you could see I did make an extra 10, 15, 20 points, which is nice. Could have made more. Unfortunately, this took me out, and then it rolled over, but still very happy with the way that I managed this trade. And the reason I went out here, I'm not going to tell you, episode 3.1, entry and exits. I've already said this. FBD threat. If you go back to that video, search FBD threat, you'll know what I mean. And you could see that that's why I'm able to have such good exit strategies. But a very nice trade again. And then another trade. I take a short. As you can see, I'm risking these highs. It rolls over. I don't get scared away. I have my risk management in place. High of day, and it rolls over. I put my stop loss at break even, and it never gets back there. And I'm just in a clear state of mind where I'm like, okay, if it goes back to my break even, so be it. And then you could see I make a banger of a trade. Like, I'm risking nothing compared to what I'm making. So those are the good practices compared to me just randomly, me just randomly exiting. So you could see I'm just here randomly exiting without any plan, whereas here I'm shorting here, risking the high, and as it's going down, I'm trailing my stop loss to these highs, rolling over, trail my stop loss lower, trail my stop loss lower, trail my stop loss lower, and you could see trail my stop loss to these highs, and as it rolls over, I take my profit. Compared to this, I'm able to milk so much out. Like, this is a 60, 70 point move, whereas on this, just 20 point, 30 point move. And it kind of shows that if you have a plan in play, that in the long run, it will play out. And then the last example, you could see once again, I short this, stop loss on the highs, and then it rolls over. I'm trailing my stop loss aggressively, and then I take everything out. And I'm able to catch a 200 to 140 point move. And if I was just trading like my bad practices, I would probably be in here and I would take everything out here for a 40 point move. So I made an extra 100 points just by trailing my stop loss, being in a clear state of mind, not letting the P&L affect me. So this is about it, about the risk management episode. It's a quick risk management, being able to show you guys how I manage my risk, how my risk managed trades on chart looks like, how my execution looks like when I manage my risk. And I hope this is a good learning curve for you guys, and also prepares you for the upcoming episodes that I'm recording in a couple of days about the contextual setups. As I said, I'm not going to go over the entries, the exit on why I took specific entries, on why I entered here, why I exited here, why I entered here, why I exited here. I already did that in episode 3.1, so make sure to watch the previous episode. Tons of value in there. And for the rest, please leave a like, comment, and subscribe. And Catch you on the next one.